Good morning, everybody. This is Junius Bennett coming to you live. This morning, I'm getting ready to go to the Chase Bank, and I got a lot of fiat currency right here that's probably about $2,200 in cash. And the reason why I want to talk about this is not to show off that I'm making money, but it's just the fact that this is what we call fiat currency, fiat cash. This is government money from your country, all right? And it has to be transferred to the bank to be digital. Okay, we go from paper, which is made out of 75% cotton, 25% linen, and we work hard for this. And then it goes into the bank, turns into digital. Now, the problem with this money, and always been the problem, because it's not being backed by gold, meaning that gold is no longer backing this currency. In 1972, Nixon got this money disconnected from gold. Now it's just connected to debt. It's a Federal Reserve note, okay? Now, so it's really money owed to other sources. Number two, is subject to taxation and is also subject to inflation. So in other words, this money is basically, if you work for it, this would be considered your after-tax dollars, all right? Today is Wednesday. It's not Friday or payday for me. I'm a business owner, so it's a little bit different. You get paid every single day, which is a benefit, all right? In business, your cash register going to ring every single day. But let's get back to digital cash, all right? Once it goes into the banking system, it turns into digital, ones and zeros. It's transferred electronically, right? No difference from Bitcoin. Bitcoin starts out as digital income, just like cash does, all right? And you can liquidate it into cash, all right, as well, through an exchange, Coinbase, or you can have a credit card, Visa, attached to your Bitcoin wallet, okay? So in other words, let's put this in layman's terms. So if you had this money in a Bitcoin wallet in a digital format, all right, it can be attached to a Visa card by BitPay, right, which is the company that gives you the card, and then you can use it at your merchants as digital cash, just like you can do this cash. Now, the difference, why would you want to own Bitcoin? Because one Bitcoin basically fluctuates in the market and goes up and it goes down. So let's take this cash. What if you had $2,200 in your hand and it could fluctuate from $2,200 to $10,000? Would that be something that you can, you don't have to work for that $10,000 in value. It just goes up if it goes up. All right. Now, Bitcoin, if you had Bitcoin in your hand, all right. Now, today it's worth 9,000, but last December it was worth 20,000. So wouldn't it be awesome to have another source of currency in addition to your cash that appreciates or depreciates, or volatility going up and going down, all right? And then you don't have to change it over to Paris money when you travel to Paris, or when you're going to Japan, Japanese money, when you transfer it over there. It's in a wallet, and you can just use it as cash like a credit card. Wouldn't it make sense to have another source of income? That's why I'm talking about Bitcoin, because it's another currency, all right, number one. Number two, it's worth more than a U.S. dollar. It's not subject to taxation or inflation, all right? Now, it's borderless and it's decentralized. I mean, there's no government controlling your money. Do you know if I was to deposit $10,000 this morning to the bank, to Chase Bank, they're going to call the IRS and say, I just deposited $10,000. Why? Because the federal government controls the money system. They really control you. And the reason why Bitcoin is so favorable is because of those very same reasons. I hope this helped you understand the difference between fiat currency, all right, and Bitcoin. Having a Bitcoin wallet and being able to use it across borders and not being affected by political scams, governments or whatever, taxes or inflations. Thank you so much for listening to this video. I hope this helped you. Have a great day.